And the pattern completion would be if you take the distance between the top of the flagpole and the bottom of the flagpole, and then subtract it from the bottom of the flagpole. That would give you pattern completion. So if this bear flag plays out, then you would expect there to be a little bit more downside out of ETH. You could see that here, let's see if ETH USD, the bear flag here isn't quite as well formed as it is on ETH BTC, but it's still there a little bit. Yeah, I'm just not convinced that we just rocket higher. Although the way this liquidation cascade played out was very interesting. So there's this big market maker called Wintermute, and they, along with Binance, essentially nuked like $1 billion in 50x levered long positions in about an hour and a half, maybe 2 hours during this cascade of liquidations. So it does seem as though there was some type of manipulation to the downside. And the fact that it happened on a Sunday evening when liquidity is thin just, adds further credence to the point that maybe there was some market maker manipulation here to get prices down a little bit. For what purpose? Don't know. Maybe to allow institutions to accumulate at lower prices, but that's, difficult to verify something like that. All you do know is that it is a fact that Wintermute and Binance nuked a bunch of positions. So maybe there's a little bit more downside out of ETH here. Let's take a look at Sol. Okay, so Sol's got a little bit of an interesting pattern here, having broken out above this bearish ascending wedge pattern. So we broke out, or Sol broke out above the top of this ascending wedge. An ascending wedge is typically a bearish price action pattern. So the fact that Sol broke out here and then failed back down below the breakout level, that's not good. So the level of support here for Sol comes in at $200, which, if you notice, let me just go ahead and extend this out a little bit. So if you notice this level, we've got some confluence here. So let me just go ahead and remove these two drawn objects so we can see this a little bit more clearly. Oh, don't want to remove the trend line, just want to remove that brush stroke. So right down here, $200. We've also got this trend line support. So this is referred to as a confluence. So this would be the level where I would expect there to be support for Solana. If we get down here and this holds, great. If this breaks, then I'd be looking for the 200-day moving average down here at 164 to hold as support. So that's what I see in Sol. Let's take a look at Bitcoin dominance. So, Ben Cowen has put out some great analysis on Bitcoin dominance. He's been putting out this analysis for years now, and he's been able to correctly call the direction of Bitcoin dominance over the last couple of years. He's been prescient. And what he's calling for now is that there will be an increase, that Bitcoin dominance will move to the upside, as Ben Cowen expects there to be a rotation into Bitcoin over the next couple of weeks. So if there's a rotation into Bitcoin and Bitcoin doesn't hold, then what that tells me is there's probably more downside out of alts ahead over the next couple of weeks. But Bitcoin dominance has broken down out of this long-term support channel. So where would we expect there to be resistance for Bitcoin dominance? Right here at like 60%. So if Bitcoin dominance gets back up to the underside of this trend line that was broken to the downside, I would expect it to hold as resistance. So that's Bitcoin dominance. Let's take a look here at the dollar. So the dollar did break this long-term support on the FOMC day, which was, last week. And I mean, it seems as though even with long end rates pushing a little bit higher after the FOMC meeting, you see the 10-year here pushed a little bit higher and the dollar found support and pushed, bounced a little bit. I still think that we're going to see more downside out of the dollar. And the reason why I think we're going to see more downside out of the dollar is if you take a look at the euro, EUR, USD, looks to me as though the euro, which is the largest component of the US dollar index, it looks as though the euro has more room to the upside, which would mean that the dollar has a little bit more room to the downside. That would be supportive of risk assets. Think equities and digital assets. So if the dollar pushes higher, or I'm sorry, if the euro pushes higher, that would mean that the dollar likely pushes lower. Okay, let's take a look at the S&P and the Nasdaq and the Russell. So, when you zoom out here, and this is a weekly, look at this chart, man. Oh my goodness. This is just a massive run over the last 10 years. And the numbers here are kind of funky. If you take a look at SPX, so SPX rallied from 666 on March, it was like March 9th of 2009, all the way up to we closed on Friday at 6664. Okay, so make of that what you will. But when I take a look at this pattern, reminds me a lot of what happened here during COVID. We got the COVID crash and then the massive rally all the way up. This was a huge rally here. We can measure this real quick. If I just grab a price range tool, measure from the trough to the peak, 100, oh my goodness, 120%. I didn't realize it was that much of a rally. Markets doubled, after putting in those COVID trough lows, the COVID crash lows.